unless you're gonna for sure risk mitigate. Anytime you drop down to such a low time frame, you want to risk mitigate. Like
So
saying like you're gonna get a bunch of like, I mean, just look at this right here. I'll zoom in. Like how many fake outs are you gonna take, right? This
yeah.
is,
So
break.
I do use a 5 second. I don't take it on 5 second line breaks though, if that makes sense.
What do you take it on?
For instance, that gold trade, I was looking for it to break 43.4.
What? Okay, but what are you looking for? Like what time frame are you looking at? What's your secondary?
A tick chart or a volume chart, which ends up being maybe a minute chart.
A minute chart? Okay.
Yeah.
So let's go look at a minute chart. We can look at whatchamacallit as well. Up to you. So we're in the zone right now, right?
Mm-hmm.
So if I were you, I would just look at a minute chart and look for a break, which happens right here, right? So technically, this high right here made this low, right? This one right here. Do you see it?
Yeah.
Okay. So I would do this and see that break. And now what we're doing is now we're focusing on here on out these candles, right? All of these.
Mm-hmm.
So then we jump down to a 5 second and just looking at those candles, right? So don't mind that because that's actually not a break. Why is it not a break? Because there's no price traded there. Do you see that?
Yeah.
Okay. Because technically what happened was went here, down, up, and then down a little pip. That doesn't count. This doesn't count, right? Because nothing was traded there. Now it comes to here, whatever. This doesn't count either because it's actually not a clean break. What's really clean is, after all this, what's really clean is this right here. All of this. That's a clean break, right? So after we have the clean break, where are we eyeing? The pullback into this. So you should have gone somewhere around here.
Yeah. Yeah, I kept waiting for, I was looking for that break of 43.4.
Yeah, but that's late though, right? Or I mean, it's in it right now. You can still take it right now. Depending on how the ES moves. So right now, if you look at it from a small standpoint, let's go here and then do this. Okay. Wait, what? Okay. All right, and then we go to say like, for instance, like a 5 minute. So, actually, better yet, let me just do this. Yes, and I'm just gonna add gold. All right. Oh wait, add it incorrectly. Sorry. Oh, new price scale. Okay, there it is. So, as gold is selling off right now, right? So is ES, right? Because we thought that they're going to move in tandem. So you kind of see how there's a slight tandem in what they're doing as of now for a risk off risk on scenario. Now, right now, ES is doing a back and fill on a 5 minute. The question is, are we going to continue to move up or not? So for this gold, it's perfect. So if we flip it and we just look at gold in and of itself on a 5 minute, right? Okay, I'll just do this. 5 minute, boom. We're doing a back and fill as well. As it's breaking up, it's doing a back and fill. Same thing. Are we going to get this right here? Right? So from this point on, so after you look at that 1 minute, and this goes for everyone else listening, you're not taking it on a 5 second in this zone. That's too small of a time frame. you want to take it on, a minute, 2 minutes, or whatever you want, this is that line break on a 1 minute. I'm just using whatever he's using on 1 minute. And once it cracks into this box, you're looking for a 5-second reversal, and it's right here. You get in, you go long. Now, it didn't achieve it, but anyways, we've got in on the 1 minute. We got a break out right here as well, right? So we broke out, came down, and then we broke again here because this low didn't hold. So we broke lower. So this is actually another retrace. Yeah. So within this area, but this still would have been a valid trade because that's a bottom tick right there, right? Yeah. You know what I'm saying? Okay. So now we're looking in this area right here. Right? So then we... Yeah, I was talking about that. So on a 1 minute, this was a line break, but it went lower. But we're still looking at this area, right? Like, as soon as it line breaks, the low is right there. So if, you don't have to draw a box, but you're drawing right there, you're looking at this area. So then you drop down to a 5-second or whatever you choose, and you look for a line break there. And it happens actually right here, right? This one, you could take that, but that's too aggressive, right? Don't forget, there's a lot of non-traded places in this, right? This is non-traded, no traded. All these little gaps are non-traded places. So you have to be very, you can't just rely on the indicator because it's about where price has gone. And if price has not gone there, traded there, then they won't take it. So the real line break is right here, back down in, and you're off to the races. So again, right now, and again, this is the low. We see this. This is a bottom tick. It's not to the tick. It doesn't have to be a to the tick, but it's good enough. Even if it's like right here, I'm still okay with it. If it gets further lower, then no. But as of now, right now, we're looking at this area, right? Why? Because we have a line break on the 1 minute now here, right? Right there. It broke it right here. And, the question is, are we going to get that 5-second line break here as well? So as of now, let's just go through this together, and if you're going to use a 5-second, you have to risk mitigate. But as of now, we want things to break this right here for now, right? This doesn't count. That's a flat top. It doesn't mean that that's a true line break. So we're just waiting for price to break there. Once it breaks there, then you can get on the retrace. Or better yet, if this prints lower here, and then we crack this, then we can look for a retrace. But you have to risk mitigate, right? And this protects you, especially because I know a lot of you guys use small time frames. That like it gives a lot of false signals. I don't care what anyone says, what they're trying to read, unless they're like super fast, like Fat Cat, you're gonna get burned. That's just the truth of the matter, right? ES is moving up, which is a good thing. The question is it going to take out the highs? If it does, then, once we get this line break, we enter. But as of right now, we're waiting for this line break right here. And once it does, then we can get in long. We'll see. And then like anything else you use, like even the cumulative delta, I know you guys know, like I use it, but here's the thing. Only if, I want to get in, then I'm start tracking this. Prior to that, you start tracking this shit, it's going to fuck you over. Don't do it. Like even the 5-second, don't look at it until it gets into your area. Otherwise, if you're just looking at it, you're going to get a bunch of like false signals. So this big push right here is perfect. Great. I like that. You want sellers to really push and give up, right? So coming back here, now where's the line break, guys? Anyone know?
42.5.
Yeah, it could be right here. You can put it here. I wouldn't blame you for that, but this is a safer area, right? Because we don't know what happened here. This looks like a bunch of garbage, right? This is, I actually really like 41.9. So, we'll see what it does. Even if I like 41.9 based on the price action, that doesn't mean I'm going to take it. I want to see it, really move. So now, based on what newer lower lows, maybe you even want to bring it here. But as of now, it's right there. And this push is still fairly decent. So this is how you stay away from losses. You have multiple time frames. You have the 1 minute, and then you have this, right? The 1 minute is showing you that without price action, without looking at it, you're like, holy shit, we're good. And then you look at the 1 minute, you're like, oh, is that a pullback? Oh, was that? No, it wasn't. Just looking at a 5 second, it really wasn't. It comes up to here, not far enough. This pullback or this pullback is not far enough. So it keeps you out of trouble. But of course, that doesn't mean that just because it gives you on the 5 second, we're going to win this trade. It's just an added confluence. It's an added layer of protection for you. That's all it really is. It has, it has nothing else. It doesn't really have anything to do with I mean, it does, but it's just an added layer. It's just part of your duck list. So look, my indicator just gave me a break right there because that high technically was responsible for this. But we broke it a long time ago and we came back and tested it. Does that mean that we missed it? I don't know. I don't think that's a real good, whatever. I think if anything, it's this one or this one. Because even if we miss this, even if it comes down to here, does whatever, and then it goes, and then it comes back, we know that it's going to come back. And even if it does go again, we know that it's going to come back. Guess what? And I'm just randomly drawing this. But does this market structure right here look very clean? Right? Oh, okay. But that doesn't look clean. Okay. But you guys get what I'm saying? It's like this is a, or whatever, right? So if you miss this, you can get into this or you can get into this. But I wouldn't go past 3. Especially on a lower time frame, I wouldn't really go past 3. Yeah, absolutely. At this 1 minute break right here, right? Yeah. So this 1 minute break right here, we're talking about from here to here, right? Yeah. I would have given it a try. Yeah. And the entry was right here because this is a bottom tick. This is a fake breakdown. Yeah. Oh, here? No, I wouldn't because you need to jump down to a 5 second and verify that. There's no verification here. There's no verification until we break all of this right here. Where? This one? Here? Right? Wait, yeah. I would, but yeah, I would definitely get long here, but I'm just saying that if you choose to, you can jump down to a 5 second time frame to get long on this instead of just blindly taking it. So if we go to a 1 minute, right? This line break right here, right? That Yeah. So this right here. Why is it not doing? Okay. This line break right here, right? This one right here. You can blindly take it right here. No problem. I wouldn't even say that you're wrong for that. There's nothing wrong with taking a long here. But as soon as you are incorrect and you start seeing this action, you better get back lower to a lower time frame or even just take it right here and be like, huh, is this a bottom tick right here? And if it is, as it pulls back or whatever you want to do the reverse hezi where it's like, okay, so we made a lower low, we cracked the highs, great, up, down. As soon as you crack this, you get in or you get on the pullback, you go for it, or you do it here right now. But I wouldn't blame you for that. I'm just saying for Bayman, he starts with a tick chart or whatever, a volume chart that is roughly about a 1 minute, and then he jumps down to a 5 second. Is why I'm showing him the 5 second chart. Yeah, I don't use 5 second charts. I watch it sometimes to kind of see where where certain stuff gaps or whatever may have happened or what happened, like zooming into a candle. But in that, I'm not really interested in that, right? So, but yeah, so I'm just looking at this zone right now, looking at ES, right here. Is it going to fail the highs? If it is, then maybe we don't want to take this gold. But even if you're plainly looking at this right here, right, you can still see the action is not happening for you right now. So now we have a new line break level. Do we still want to take this? It is deathly close to this low right here. Do we want to still take it? Even if you did, even if it goes from here to here to here, you're only taking on 421 to 41.4. That's a small little stop loss. To take a stop for a potential huge gain, that's not bad, right? 424, 421 here, and then let's just zoom out to like a 1 minute real quick for an initial like rejection zone. Probably somewhere around this top, or even let's just say to next major level. If we can get up to next major level, that's a 9 risk to reward, and that doesn't mean that that's going to happen. We know that it's a low probability play. Why? Because anytime you have any kind of small stop loss, it's going to be a low probability play regardless, guys. Right? So right here, we just tapped the lows, but that saved us from getting involved right now. That saved us for, in case like someone decided, oh, we're back into this zone right here. Let me just get long, boom, and then you get stopped out. Right? That's not fun. And then you're like, I got stopped out. Let me get back in, and then back in, and then back in, and then you're stopped out. Wait for the confirmation. Right? So is this confirmation? I'm still see again, lower time frames, that LB indicator will show you weird shit because this wasn't printed, right? But technically it's still up here. So we're still waiting for that. Let's look at ES. It's still trying to challenge the highs. It's not doing a very good job though. Still fake high. Does that answer your question, Bayman and Peter?
Yeah, I mean, my original question was just on that pullback, should I still be looking for long? Like what's happening right now?
Yeah, I mean, you definitely could. But here's the thing, though. I like doing it the first time in. Like first time into zone, I like it. Afterwards, it's kind of scary. Right? So, for instance, this was an area that we were trying to get long in already. It came down a little bit lower. That's fine. if you want to still take it, you can still take it because the next entry zone was like down here somewhere. I forgot where I put it, but you can still get into this. This is a perfect, break and retest, right? We broke right here, retest into a major level right here. And where did it stop? Major level. And as we're coming back down, you can as it's clearing, you can retake this for one last try. But now, if you zoom out, this is starting to look a little bearish right here, right? But does that mean that you don't take it? I don't look at channels like that, but you definitely could. You know what I'm saying? So here, we just broke right now. Question is, are we going to take it? Let me see what ES is doing. Get the 1 minute. Five. Fuck it, take it. 42.1. See if I can get it. This was the breakdown. 42.1. Yeah. Take it. Right? Because we broke the line right now. There it goes. And let's see if we can back and fill. And then they don't have to back and fill 5 seconds, but here's a 1 minute break. Technically speaking, we did do it, right? Equal lows too, by the way. So we're looking at 42.1, 42.3, somewhere along those lines. And we want ES to continue to break upwards. And if it doesn't, you're not risking too much. Right? Risking 0.7 ticks, 7 ticks. And if we do take this, we're still aiming, probably if it goes, we're probably aiming further past this, right? We're not taking it off too soon. We're probably aiming further past this. If we can get filled, and we don't get filled, it's fine. It's not a big deal. Any questions or anything?
At what point? I think I know the answer to this, but at what point would you? Sorry, give me just a second. I'm sick right now. 1 second. So I think I know the answer to this, but at what point, like say you have your limit sitting right there to get filled, would you take it off? Would it be like after it broke or after it started making lower highs? Or sorry, higher lows.
When I would take off, I'll probably take it off. You see, and sometimes we don't get filled, so fuck it. I would take it off if it probably breaks up here. To be honest,
keep your limit down there until
then. Okay. And it's not a great thing because sometimes I'm like fuck, I forgot it, and it gets filled overnight or some shit. Sometimes it's great because I come back and like, oh yeah, I made some money without knowing it, but it's also bad even if you make money because 9 times out of 10 you don't set your targets correctly because you didn't know it got filled. So, at the risk of the OCO happened to be at your perfect zone, it's rare. But you still make money. You can't complain about it. You were sleeping or taking a shit, whatever. It's good, but sometimes it gets hit and it stops you out, which is another rare thing. It rarely doesn't do that for me. If it hits, usually I risk mitigate almost blindly, because the zones, the levels, in my opinion, are good enough where if it comes in, you're gonna see a reaction. Of course, there are a lot of times where like the Z plays, there's just no go, right? For instance, like I think crude oil yesterday, we had we had a no go. No, what was it? It was I forgot which one it was that was no go. It wasn't yesterday. It was the day before. But anyways, it's rare that it's a no go. It's oftentimes you'll see a reaction. Just like I'm not saying to do this. I'm just saying if you were to blindly take this, at this key major level, like there's no reason. Let's just zoom out real quick, right? Prior to me giving this to you guys, 1 second. So let's just say prior to me giving this level to you guys, right? Let's just do it like that, right? Prior to me giving this to you guys, okay? Which you guys got it, I don't know. I probably didn't give it to you guys until what? Either late July or mid August. I don't remember. But other than that, was there any other reason as to why this 5325 was important, in your opinion, guys? Like, was there anything that told you guys, 5325 is a level prior to me giving it to you guys?
Probably not.
I mean, there's no structure. We can even zoom out on a weekly. This 5325, it's right smack in the middle of nowhere, here, whatever, right? But, so my point is, let's just say you were to take it today. Why is it so important? Why are they rejecting this so hard? Why is it there? Does it have to do with anything else? No. Why is it rejecting it here? Like, there's absolute reasons. Yesterday's low was basically there where we reject it. It doesn't have to stop on a dime, but why, right? So my point is this. If you were just to look at this, and let's just zoom in on I don't want to go 5 seconds, let's go 30 second, right? So let's go on a 30 second, and then let's just go to yesterday. 30 second, or let's just go 1 minute for arguments. For you, right? As we're coming here, where's a line break? Where's a true line break? It's right here, right? There. Why? Because this came down. This pushed down, finally closed right there, brought it back up, down, breaks it. Where this is in a very key level. So what do? You find something to get long. It works out for you, right? But let's just say we continue to move on, right? And we're still using the 1 minute, right? Right here, it rejects it. Now, it didn't give us good enough pullback, so forget about it. Moving on, right? There's no 1 minute structure, anything. Right here, we have one right here. You would have lost here, that's fine. But at least now you're like, shit, I'm losing it here. Let me see what this is. Do I need to get short? Do I need to get long? What is going on here? I'm not that type of trader, but you certainly can get short here. And then as we come up to here, 1 minute, we have another break right here, right? Back. And then you can short this. And here's the thing. It's not about, right now, you don't know anything about the trade ideas. You don't know anything. The point is now you have the levels. You can easily based on 2 different time frames, you can easily get a break even here, right? So we have a touch, we have no line breaks on the 1 minute. We have a touch, no line break. We have a touch, no line break yet. You have a higher touch. The line break comes into here. We'll focus on these candles right now. Again, for Bayman's example, drop down to a 5-second and see where it is. So from this point on, we went up here. Do we have a 5-second? But we have it right here. So maybe this is, and we didn't back and fill this. So maybe this is the back and fill. Whether or not it is or it isn't, it goes. So that's, that's one. And then let's go back to a minute. I'm just showing you guys like how you guys can trade these levels. You don't need to trade my ideas. My ideas are very, very different, right? So that's a key level. Again, let's just look at, say, like a shorter time frame stuff. I don't know where that came from. All right. I'll use a losing situation, I guess. Right here. This area right now. We come up to this level. We have a break down right here. Now we can zoom in to see if any of this is a possible short. It didn't pan out. There's other reasons for it. But structurally, you guys can use this. Drop down to 1 minute. Fuck, I should have remembered the time of day of that. That would have probably helped me a lot. Oh, there it is. Right? Now we're looking at a 1 minute. Within this area, we have a structured break right here. You can actually, if you got short there, that's fine. Right? So let's just say, I mean, this is a loser. There's nothing to see. But at least you can play it just based on these levels. Purely just based on levels. Especially with everyone here's ability to enter, you guys should be breaking even all the time. Like all the time. And the reason why this wasn't is because the higher time frame is actually positive. Going back to that example, which is right here, we're positive. We did a line break on a 15-minute. Why would you short here? So, if anything, you're looking for buys, right? So, what you can do is say, maybe start like an hour. I think for you guys, an hour is good, right? So, let's just start right here. Like this is just, by the way, this is just Z plays right here, right? Basically, we have a line break right here, right? Back and fill. If we didn't get that, that's okay. We come up, we make higher highs. Where are we going to test? Well, we're going to test around these levels. Well, then we can just zoom in on this, and I don't think I can go as far back, but this is a 20-second. 20-second. Let's go to like a 2 minute on the 22nd and see if we can get there. Is this helping?
Yeah.
All right. I don't want to waste my time. All right. 22nd. We think that we're going to take it here. So guess what happens? We have a line break right there. Comes down, stops us out. That's fine. If you have a small stop loss, you have to expect a lot of stop outs. That's fine. Look for another break right here. Get in. That's an easy risk mitigation. That breaks lower, but bottom tick possibly. Look for another break to get in. Just keep on looking for it. Here is that line break, right? Because this caused this lower low. You were able to risk mitigate on the second one. You lost down the first one, assuming you didn't drop down to another lower time frame. So from this point on, we're working from this line break to this low and trying to figure out where the entry is. Well, look at where the entry is, right here. And what happens? We fucking shoot. We shoot forward. Right? But this all started on the hourly. Right? The hourly on the 22nd, right here, gave us a reversal, and that was the first touch. And this is where like Harvey has an issue with, is like he misses this, so you can't get into this one or anything else. But this was that first touch, and then we shoot up. I mean, I'm not saying that. By the way, if you guys remember, this was a play on the Z plays, and I didn't think we were going to shoot up that high. So going back to, was I on the 1 minute?
2 minutes.
I was on 2 minutes?
Yeah.
Okay. 1 minute probably couldn't get there, huh? Okay. I don't know. So then, yeah, so we shoot up to these next levels. And then what we do is we wait to see what happens, and we just drop down to the hourly real quick, right? And then if you're swing trading, you got the balls swing trade. As we come up to here, you're looking at a possible, if there's a reversion or a line break, and there isn't. But if you're swing trading it, I mean, if you're day trading, you should have been out already. But if you're swing trading it, this whole entire move gives us a reversal to where we break that back and fill down. But then we didn't go down enough, so they took it back up. But we're just taking it for you guys day to day. We're not going to swing trade this, right? Because if you're swing trading, chances are you're not entering on a 5 second. You know what I'm saying? You're probably looking at like at least a weekly. And if you're looking at a weekly in August 22nd, right? Let's go August 22nd, which is right here. This week right here. This doesn't look very bearish to me, right? You need to crack much lower. And as a matter of fact, that doesn't mean that we're bullish either. It just means that we're kind of in the middle of nowhere. I would probably drop down to kind of look at things a little bit more. And if you were to drop down to like a daily on the 22nd, right, which is on this day right here, we're already starting to look like, oh, pretty bullish. So we can actually play this instead. And this is what I do as far as analysis goes. Like, okay, we'll zoom out, and this is why I'm bearish. It's because we have a line break right here. On a bigger time frame, this is a back and fill. This was Tuesday, and Friday. And truthfully, I was like, fuck, if my internet was on, I would have made a shit ton of money. But anyways, it's sold off. So it's just the multi-time frame analysis. Get it?
Got it.
Cool.
No, I have been
Anyways.
kind of tracking that a lot more lately. A lot more, actually.
Line breaks?
Yeah, on like the multiple time frames, like going up to the weeklies.
Good. But yeah, so yeah, so I I think that I mean that's the price action side of what I do, not necessarily everything I do, right? Because clearly you got to look at flows, everything else. But that's just a very small, I would say that's about 20% of what I look at, what I look for.
Where I'm starting.
No, it's a good start. It's a good start. Anyhow, if no more questions, I'm gonna rest.
All right. Appreciate it, man.
Yep. All right, man. I'll talk to you guys later. Later, guys. Yep. Later.